This is your brain on risk. This is Mind Over Money, the podcast where Kevin Cook exposes the psychology of investing.
Welcome back to Mind Over Money. I'm Kevin Cook, your field guide and storyteller for the fascinating arena of behavioral economics. Followers know that I love Twitter, not for the political fights, but for what I call communities of knowledge. The platform creates a social conversation between experts from so many fields of interest, from finance, philosophy, and science to fitness, nutrition, and psychology. Then there's the intertwined communities of startups, venture capital, and SaaS, software as a service companies that I like to eavesdrop on to learn about the latest business trends and what's coming on the horizon. One niche that I haven't discovered there on Twitter to be as vibrant as it is on LinkedIn is the arena for financial advisors and their favorite topics about serving their clients and growing their practices. Last year, I stumbled across a gentleman named Brendan Fraser, who has become the epicenter for this group with his podcast, The Human Side of Money, and his relentless posting and resharing of good content on LinkedIn. In fact, that's how I found today's guest that we're going to meet shortly. Brendan is also a fan of behavioral economics and the cognitive biases that serve us or hinder us in long-term planning. But his podcast goes way beyond that because of the skilled and passionate guests who come on and talk about their unique ways of serving clients. One common theme that a good advisor is taking his or her clients through is a structured process. That's what most of them who come on the podcast are talking about, their process for dealing with clients, talking to clients, helping clients, and it's client centered and it's based on lots of inquiry and then listening closely for answers and then uncovering layers of answers with even more questions. So it's not just about client goals, aspirations, and dreams to create a financial plan, but also about their conflicts, their constraints, and their worries. In other words, all these advisors seem to have their own powerful angle on emotional intelligence as a way of getting to know and serving clients. Now, even if you aren't in the market for a new financial advisor, you should check out Brendan's feed on LinkedIn and his podcast to learn what your current advisor could be doing better for you and your money. I'll have the links in the article version of this episode on Zax.com. Now, as serendipity would have it, in my morning email from wealthmanagement.com, the feature story was about former NFL running back Vaughn Hebron, who played for the Philadelphia Eagles and the Denver Broncos. Here's how the description of the piece reads. Successful financial advisors know what their clients really think about them. Period. With that in mind, we talked to Vaughn Hebron, a former running back for the Denver Broncos, who heads VMS Movement Specialists, a fitness center and personal training studio in Newtown, Pennsylvania, about his experience as a client. And I just want to read a little bit about what Vaughn said, because this is sort of written from his point of view, and it looks like it's part of a series that Wealth Management does, wealthmanagement.com, that they title, let me see here, My Life as a Client Stories. Okay, so it's the client gets to speak from their own point of view, and so this is interesting. While I was playing football, what I was making seemed like big money to me, but it was nothing compared to some of the other guys. My mindset was I wasn't a big spender, and I figured I was just going to save. A family friend wanted to help out, but I thought I didn't need anybody to give me advice. I didn't grow up around investing. And if you don't grow up in a world where your parents invest, you don't understand what the stock market is. You think that's for someone else. I retired in 1999 and then started working at a gym as a trainer. A few years later, I started my own fitness center. While I was working at the gym, a financial advisor started training with me. I found out what he did and I told him my story. I didn't know anything about investments, so I thought, let me see what that's about. And we formed a friendship. Probably a year later, I decided to become his client. All these memories came back, and I realized how I could have used this knowledge when I played football And at the time, I thought that with the measly amount I was making compared to the other guys, I didn't need help. But that was BS. In fact, I really needed it. I could have doubled or tripled my money. But you don't know what you don't know. In the beginning, like any good advisor, my new friend had to get to know me better. But he had a pretty good idea right away what I needed. Being a football player for so long, my life was always run by itineraries. I'm used to a schedule. And that's how we set up my accounts. He created a machine for me. We talk about my goals for the year, form a plan, and then when my check is deposited, a certain amount goes to this account, another part goes to that account, and then there's no chance to make bad decisions. Oh, I love that part. Little tricks like that have been invaluable to me. Let's see if there's something else I wanted to share from this. Just one more paragraph here. So Vaughn is speaking of his advisor. He knows that you've got to understand your client and what works best for them. Some people want to be involved in every part of it with a million questions. That's not me. I feel that's the reason for the meeting at the beginning of the year. After that, I sit back and you do your thing. One more thing here. Vaughn says, the biggest benefit for me was the education I got. I can't express enough how important that was. A lot of people just don't believe investing is for them. But once you start doing something, you think, this is not that bad. And once you start understanding it, you wonder, why didn't I do this sooner? And he goes on, he closes out the piece saying that he's gone on to help his advisor reach more professional athletes. And the advice that Vaughn gave his advisor was, you got to get to the guys while they're young. Don't wait till they're already in the NFL and distracted making the big money. Start talking to them, when they're getting drafted, before those big paychecks start hitting and they don't know what to do, or they think they're on top of the world and don't need help, just like was Vaughn's story. So, all right, back to my notes here. So today I want to introduce Mind Over Money listeners to an up-and-coming financial advisor who I found in the orbit of Brendan Fraser and the Human Side of Money. His profile on LinkedIn, I just want to read this here because he's got a banner up at the top of his profile, which is exciting and worth reading. Financial planning for Gen Z and millennials. And he is Gen Z himself. And then he has a little byline there, specializing in crypto investors employed in STEM and healthcare. So that's kind of a combo thing there. He's catering to young professionals who are in STEM fields and or healthcare, and who are probably also fascinated with crypto as the younger generations are. So he's helping them sort of navigate those waters, in addition to having long-term investment plans elsewhere. So Zechariah is the founder and principal of the advice-only firm Ascent Personal Finance. And I'll be back to chat with him faster than you can spell fiduciary. So today we're going to meet Zechariah Schaefer, who is the founder of Ascent Personal Finance, an advice-only financial planning firm where he focuses on Gen Z and millennials, helping them both with their long-term equity investments and their fascination with crypto. Zechariah, welcome to Mind Over Money.
Thank you, Kevin. Glad to be here.
So we'll talk about crypto as it's in another bear market. What's interesting is that you just pointed out to me before this that while young equity investors may be seeing their first bear market ever, the ones who deal in crypto have seen several. and I think that's good training for them, don't you?
I do, yeah. I think for me, it provides really good perspective. So a little bit of backstory, I got into crypto, discovered it in 2014, but I only started investing after I turned 18 in 2017. And that first year, it was just all booming. And then that next year was all busting. And seeing that cycle, seeing the emotions that I went through and others went through during that cycle, and also the just negative 80+% drop, gave me a lot of perspective now, and I think it gave a lot of crypto investors perspective. Where when the market, and I say the stock market now, when the stock market goes down 2 or 3%, they're a little less worried because they're kind of like, well, this is just a normal day in crypto.
Yeah, this is fascinating. It's like really good behavioral training. So if you have a long-term view, if you have a 10 or 20-year view, then you're not even worried about 5 and 10% declines.
No. Yeah.
All right. So I want to start with your profile on LinkedIn is fun for several reasons, but in particular, you have 3 featured content posts in the featured section of your LinkedIn profile. Mm-hmm. And I want to go through each of them because they all provide just a great catalyst for conversation and to explain how you do things. And the first one is, here, I'll have to expand it. You say, if I could tell the world only one thing about financial planning, it would be this. And you fleshed out a little bit, but you also have some great diagrams. And basically, you've got this diagram that shows what people think financial advice is. And it just shows 2 elements, investments and insurance, which are 50% each. And that's what most people think financial advice is. And then below that, you have sort of a pie chart with what real financial advice is, where you're covering risk management, budget and credit, tax strategies, estate planning, emotion and behavior management. Where did you learn at such a young age that this was the universe that you had to talk to clients with about their money and their future?
Yeah, so a lot of the credit goes to my professor, Professor Cornfield, the director of the financial planning program at Liberty University, where I went. And whether or not you like that institution, I do say that their financial planning program is excellent. And from the start, he drills into us that being a financial planner is really about life management, and that life events are money events, and that the firms we want to work at one day, the firms we want to start, the way we want to serve our clients is going to be centered around their lives, not their money. So, when people hear financial advice, they always think investments, insurance. That's the 2 responses that I get the most often. It's like, oh, like what do you think the next hot stock is? Or, oh, so like you sell insurance, right? And I didn't get fed up, but it got a little frustrating because there's such a disconnect between what it actually is, what financial advice actually is versus what people think it is. And so I made that diagram along with other diagrams that I make just to illuminate certain things about financial concepts for the financial advice industry that not a lot of people know.
Very good. And that was Liberty University, you said, right?
Yes. Yeah. Lynchburg, Virginia.
So the next piece of content I want to highlight that you have on your featured section is not your story about where you got your university training, but here's how you title it: the story behind why I'm so passionate about financial planning. And I'm just going to read a couple of lines and I'll let you expand on it. And so this is from Zechariah's post. My parents divorced when I was 7. It was messy. The court proceedings took 3 years. Our lives were thrown into turmoil. We went from affluence to holes in our pants, falling apart shoes, and not knowing how we'd pay for next week's groceries. During the 3 years of court, I saw my mom, now single mom, struggle to manage her money. She worked hard to provide for her young sons, pay her legal team, and take care of herself. She was doing her best, but the expert help she needed, she couldn't afford. My drive to help people with their money was born. That's a powerful story. I mean, that is a pretty big why. And so like when you were a teenager, you knew that you wanted to do something with learning about money and helping people.
So a little bit more backstory. My dad worked on Wall Street. He did Forex trading, as you and I talked about.
That's right.
Yeah. And so he is super smart. And, in my early years, before age 7, when I'd go into the office and I'd see what he did. It always fascinated me. And then I also, looking back, and as I got older, I realized more. I didn't know it when I was, say, 5 years old, but looking back, I realized just how well-to-do we were. And then also how he managed all the money. He did really well. And so when they got divorced, not only was my mom doing all those other things that, you mentioned when you read my post, but also she was trying to manage money for the first time, really since she had just been out of college. And I don't like, she didn't make bad decisions, but what I did see is that the amount of time, effort, emotional energy, anxiety that went into making those decisions, if she had just had an expert who could help her, who she could just call and, ask a 5-minute question, that would have saved her 3 hours of Googling, not to mention probably resulted in a higher quality outcome. But at the very least, saved her that time. And so, I saw the power of what financial knowledge had and how it could help someone improve their situation. But I got super into computers, software engineering. I thought I wanted to either go start the next Google and be a software engineer, or go start a cybersecurity company. And that was because, I still am. I'm a huge nerd, and got super engrossed into it. Built my own computer. Was always playing video games with my friends in middle school. And then, fast forward senior year of high school, I'm about to go study software engineering, and I take this personal finance class, and it's just like the light bulb went off. And I was like, no, this is what I want to do. I want to help people manage their money. I want to help them make excellent financial decisions. And then if we fast forward a few more years, I'm in college. I was blessed with an excellent internship at a really, really high quality wealth management firm, and then another one, and then another one. And those 3 firms that I worked at, I learned a ton from them. They did excellent work for their clients, but the common denominator was that young people who were really high performers, who I related to people that I love, because these people were a lot like my peers who had just graduated. They needed help and couldn't afford it, or the traditional model just didn't work. They didn't need to be sold insurance or other products, and they didn't need their investments to be managed. They needed advice, education, solutions, accountability, so that they could build a good financial foundation, but that wasn't available to them. And that was really where the passion was born to start my firm, because, when I was young, someone I loved, my mom, needed help, and I couldn't do anything about it. But this time, people that I love needed help, and I can do something about it. I am doing something about it. So it's really exciting to me.
Wow, that's fantastic. Thanks for all that extra background. The 2 things I want to highlight are when you said, like, when your mom was struggling and, had a question because she's trying to learn about finance, she could easily spend 3 hours on Google. Heck, you can spend 3 days or 3 weeks and eventually give up. But yeah, if you could pick up the phone and call an advisor that's there to help you, like a coach, and sort out the decision or the issues for you, I mean, that is just almost priceless.
Right. And that's what I saw a lot of my friends who were a little bit older than me and had already finished school. They got some, a lot of them are really smart, and they got some really great jobs. And then I saw them dealing with, again, the anxiety, the uncertainty of, am I making the right financial decisions, or just the immense time commitment that it is to stay up to date in all these things when you have tax law changing every 4 years or every 2 years. Yeah.
Right. And so the other thing I want to point out is, so after after college, and you learned and you were inspired in that financial planning program, then you went and interned at real wealth management firms and learned the nitty gritty and the process. And you were at 3 different places, so that's powerful training in itself. I tell every young person, if you can intern somewhere, do it, because you are going to learn business, as it is. But then the powerful thing there for you was that, you noticed that, all your peers, your young professionals in STEM and healthcare, they couldn't afford the advice. And so they were kind of winging it. That's like our football player today, right? From the guy, Vaughn Hebron from the 90s. That's what he looks back. He's like, yeah, when you're young and making money, you need to get some advice so you have some kind of clear plan.
Yeah, that's exactly what I saw.
I want to take a look at your website, because you have a section called Our Commitment to You. And I'm going to have you define what a fiduciary is in a moment. But first, I want to read all the different models that we hear out there. When we hear a financial advisor or a firm or a service described, there are so many different ways that advisors describe their firm. And I'm just going to read a laundry list here. Commission-based, fee-based, fee-only, assets under management, flat fee with investment management, project-based, monthly retainer, hourly, advice only. You call yourself advice only. And so what should somebody know that means, and then what typically is the agreement you create with a client?
Right. So advice only financial planning, the simplest definition of it is that it's fee only, which for anyone listening, fee only means that the advisor is paid only by a fee. So there's no way for them to get a commission by selling a product. They're purely paid a fee. Fee only can be a subscription fee. It can be an hourly fee. It can be a percentage of assets fee. So advice only financial planning is a fee only model that serves investors or clients without the expectation, obligation, or even the option to manage their investments. So they are coming to me and other advice only planners purely for advice, purely for direction towards the solutions that they need. And then they know that I'm only getting paid the fee that they pay me, which for my business, it's a subscription fee.
Yeah. And some of the, if some people are newer to these models, I'll just say that in this little universe, if an advisor is managing your money and they actually have access to your account and they move stuff around or your money is under their umbrella, then they might get a fee for that. So that could be based on AUM, assets under management, or some other flat fees. So on the spectrum of advisors, all the way at one end, we could look at the advisors who sell products and get a commission. And so, it begs the question about whether they have your interests purely at heart. And on the other end of the spectrum is what we call the fiduciary, where the fiduciary model is dedicated to you and your needs first. Is that accurate, or how? And what would you want to add to the definition of fiduciary?
Yeah, I mean, I would just say that the definition of fiduciary is simply being legally obligated to act in the client's best interest. So okay. That, no matter whether or not someone calls themselves a fiduciary, there's still conflicts of interest. So for me, with my model, I've tried to build it so there's the least conflicts of interest possible. But even still, you could argue the conflict of interest for me is to either overcomplicate things so the clients need me, maybe past the point where if I just educated them more, they wouldn't. Or you could argue the conflict of interest is for me to make their situation seem more complicated to them than it is, so that I generate a higher fee, or so that I justify a higher fee. Whereas, the conflict of interest for an hourly planner is to inflate their hours or to do things in an inefficient way. So technically they're working the whole time, but it's a little longer. Or the conflict of interest for an advisor who charges a percentage of assets under management is to give advice that grows their assets under management, which sounds great at first. But then if you think about if someone has, say, a 401k from their old job and they moved over to their new job and they have a great 401k there, an AUM advisor may be incentivized to, instead of rolling that old 401k over into the new one and retaining the protection against creditors and certain other benefits of being in a 401k, they might be incentivized to turn it into an IRA that they can then manage and charge a fee on. So really, all that to say, whether you're a commission-only advisor, whether you're hybrid, whether you're fee-only percentage of assets, fee-only advice only, I think that the most important thing is integrity. And I don't think there's one right fee model. I think the most important thing is simply providing value in excess of the fee that an advisor charges and acting with integrity, which is hard to judge in a small amount of time, which I empathize with the client for that. And I offer clients a trial period to hopefully, mitigate that.
All right, well, let's get into that. Roughly describe an average process with an average client. What are your steps in meeting them and then possibly creating a plan for them?
Yeah. So the way that I like to explain it, I'm big into hiking, and I like to relate a lot of things back to that. So that's the reason why Ascent is called Ascent, because for a young person, their financial journey is a lot like climbing a mountain, and it's a lot like being at the start of climbing a mountain. And so for them, I kind of equate it to they're walking along the trail and they come across a ranger station. And at that ranger station is me. And I say, hey, if you'd like to hire me for a limited engagement, then I'm happy to kind of take inventory of where you are, make sure your financial house is in order. And then once we have that done, then figure out where you want to go. Once we know where you are, where you want to go, then plot a course. Just like if you're looking at a map when you have no idea where you are or where you want to go, drawing a bunch of lines on the map really isn't going to help you that much. Or if you know where you want to go, but you don't know where you are, if you know where you want to go, but you don't know where you are, still doesn't really help you. So that's kind of like the trial period for them. And that's a 3-meeting process where there's, the introduction, a little bit of data gathering. Then they sync their accounts into my financial planning software. I look at that in more detail. There's a second meeting where there's a lot more data gathering. They bring some documents in. I ask them some deeper questions about what they really value in life. The details of certain financial instruments that they may own. For example, what are the details of their equity compensation package, or where's all of their crypto stored? How is their security protocol for their crypto? Things like that. And at that point, I go back, I look at everything that I've gathered, kind of do my, financial detective thing, if you will, and then bring them what I call their foundations document, which is when I present them their building blocks. And this is the third and final meeting of that, trial period onboarding process, if you will, their foundations meeting. And so I'll present them, the 2 to 3 building blocks that are going to most materially improve their trajectory over the long run. And for most people, that's making sure they're saving enough. And if they are saving enough already, that's making sure that they're saving it in the best tax locations possible. For a lot of crypto investors, it's making sure that they're not overexposed to the risk that holding crypto can, because a lot of crypto investors come to me and they own too much crypto. And I explain to them that if this crypto goes to zero, they're going to have to work until they're, age 78. And we don't want that to happen. And, maybe there's a couple other things that are kind of those building blocks. And at that point, that's the trial period. They've gotten a feel for me. They paid me, it starts at $1,000 for that. They paid me a fee that's reasonable, but not too high. And if either of us don't like each other, if I'm not going to accept them into my program, or if they just, don't want to work with me on an ongoing basis for whatever reason, that's okay. We part ways and we're better for it, both of us. If they do want to work with me, which I haven't had a person go through that period yet, and not at the very least engage me in some way, then that's where I kind of get into the ongoing help, which I equate to, instead of stopping at the ranger station, that's kind of like the checkpoints along the way. And then you have a satellite phone that you can call your ranger anytime you need them. And so I meet with them, in the winter, the spring, and the fall, and I go through one of the 6 areas of financial planning and assess their situation for, strengths, weaknesses, opportunities, threats, so that, 3 meetings a year, every 2 years, everything's up to date, everything's on track. And then, we always talk about, what they want to talk about, which usually actually takes most of the meeting, and my agenda is, like the last 10 minutes. And then I'm available, at any time during the year. Again, these are young people, they're high performers, they're switching jobs, they're having babies, they're buying houses, they're buying cars, they're starting businesses. The crypto market is crashing. The stock market is in a bear market. Lots of things are going on. So there's never a shortage of things to talk about. And so, if one of those things happens and it's in the meeting off season, then we just have a Zoom call, or I make them a video, or have a phone call. And then the last thing is, of the big service items that their subscription includes, I also do their taxes for them.
Oh, wow.
And that's just because I believe that the accountant and the financial planner are kind of like your right and your left hand of your team. And you want to have the right and the left hand know what they're doing and work together.
Yeah.
And especially for crypto investors, for equity compensated individuals, having that coordination is key to, one, implement the strategies that I, the planner, am calling for, but then also make sure that they're actually carried out correctly on the tax return at the end of the year.
Very excellent explanation there of your process. I was thinking Von Hebron again, that he wants to be hands off. He's like, he trusts his advisor. They make a plan at the beginning of the year and he just lets the guy run. And I'm sure you have clients on either end of the spectrum. So how do you handle it if somebody wants to execute the plan themselves, or if you do it for them?
So being advice only, there's not a ton of me do it for them, if you will.
Okay.
But the way that I tackle that is, if they're super hands-on and they want to do it all themselves, then I'll give them the steps, and they'll email me a day or two later and they're like, done, what's next? Holy cow, y'all are so on top of it. And then with some of them, they want to do it together. So this is, be the equivalent of me doing it for them, where we'll get on a Zoom call, they'll screen share, and then usually it's with investments. We'll just go through and set up the proper investment solution for their situation, which for many of them is just setting up a robo-advisor and having them pay that robo-advisor, a minuscule fee, and it's going to develop the appropriate asset allocation for them. I might edit it if I feel necessary, don't usually. And then it's going to rebalance it automatically, and it's going to invest all the contributions automatically, which is super convenient.
And it sounds like there's a key element of accountability going both ways between yourself and the clients, right?
Yeah, yes, there is. So I'm very clear about what they can expect from me, but then also what I expect from them. And so I expect them to, make every best effort to be willing, able, and ready to follow the advice that I give them. Because after all, if they're not following the advice that I give them and I'm advice only, then they probably should fire me, or I'll probably, tell them that maybe they need a different advisor.
Right. Yeah. If they're not going to listen to you, then you're not providing the value that you set out to.
Right. Exactly.
Yeah. I want to talk about this third piece of content you have on LinkedIn. The post was titled, "So many people have it all wrong about wealth. Wealth isn't money. Here's what it really is." And this is another one of your great little diagrams where a picture is worth 10,000 words. People think wealth is money, but then you've got a pie chart below that. What real wealth is: health, family, experiences, freedom, community, fulfilling work, friends. Is this something you talk about to your Gen Z clients?
It is, yeah. It's something that I'm really thankful that I get the opportunity to talk about, and I'm thankful that even though I had some really hard lessons in my childhood that taught me this, I'm thankful that they gave me that perspective. So, for example, my parents divorced when I was young. I saw how money did not equate to not having problems, and I also saw that not having money, same side of their coin. Sometimes without money, you're happier. And with the crypto bubble in 2017, that year I invested a couple thousand, $10,000 to $20,000, and it turned into north of $150,000, which for a high school senior then heading into freshman year of college is a lot of money. I mean, for anyone, well, for most people, that's a lot of money, but especially for someone who inside of the same year was making $750 an hour as a lifeguard and then also had a $150,000 crypto portfolio 8 months later. And at that time, I was actually going through a really hard time in life. And that was actually one of the times where I was most unhappy in life. But up until that point was the wealthiest, quote unquote, that I'd been. That gave me perspective there as well.
Interesting. Yeah. So I want to close out here and ask you about some unique content that you're doing. And you post some of it on LinkedIn. I'm sure you have it on Instagram or TikTok too. And it's you're doing one of these solo mock interviews where
Yes.
you play yourself, but then you also play a character. And let me know if I'm pronouncing his name right. His name is Pan Ixeller.
You got it right.
And he's and in the few episodes I've watched, they're like all about a minute long, so perfect for TikTok. He's banging his head against his fist about the how his crypto's all down and the stock market's down and what in the world is happening and should I sell everything? And so you kind of have a dialogue and walk him through it. Well, first of all, what's the name Pan Ixeller about, and how have you come up with this idea?
I mean, the name Pan Ixeller is just a play on words.
Oh, I get it. Pan Ixeller. Thank you. Kevin finally woke up. It's Pan Ixeller. Thank you.
Yes, the name Pan Ixeller is just a play on words. It'd be fun to get up there and be like, so Zechariah, I'm panicking right now. Well, Zechariah, here's what you should do. But I figured, maybe we could have a little fun, throw a pun in there. So that's what that is. And I think it's just kind of supposed to represent the proverbial panic seller, the person who hasn't quite had education bridge the gap between what they should be feeling and what they are feeling. Because I think oftentimes, our response, our emotional response is really comes out of how educated we are about something, how familiar we are with something. So on the one side of the screen, you have panic seller who's panicking because the stock market's down. And on the other side, you have Zechariah, me, who hopefully is a impartial voice projecting the fact that actually this is a buying opportunity and you don't need these retirement funds for 40 more years. So the market being down just means everything on sale. And that's actually gonna be really good. And it's kind of meant to mimic, I think, a lot of the conversations that people are having in their heads or with their friends right now.
I love that. My colleague, Tracy Reinick, who runs the Market Edge podcast here and also the Value Investor Portfolio, she and I will do something every quarter or so when the market's going down about, what should we do? What should we do? And and my favorite way of framing it is, what kind of money is this? Is this 10-year money, 20-year money, 30-year money? And if that's the case, yeah, you look at it as like, man, things are going on sale. And that's really how you boost your returns is having cash ready to deploy in the market on the big declines.
Mm-hmm. Yep.
So your Pan Ixeller videos, I assume you post those on Instagram and TikTok. Was I right about that?
I do, yeah. So I posted them on Instagram, and then I posted them on TikTok, and then put them on LinkedIn.
And what kind of response do you get from millennials and Gen Z watching them on Instagram or TikTok?
I think, it's all positive. Some people are like, this is scarily relatable, and other people, I think they're a little skeptical because they just haven't been presented with as much evidence as I have yet. And so sometimes it elicits questions of, well, why are you so optimistic? Like, yeah, that's great and all, but the markets are still down and there's still a lot of stuff going on. And so, I think posting videos like these then also gives me another opportunity for education, which is great because I get to reply to those comments and make more educational videos.
Yeah. And I should tell our listeners that the videos are funny. You have a great sense of humor and you try and pack them down to a minute or less, for those social media sites like TikTok. So you've got the panic seller asking his nervous questions and then you trying to give advice, but it also forces you to talk really fast. And so you're giving these, important lifetime financial concepts. And sometimes you're talking so fast, I have to listen to them again. So that's why I'm glad that your introduction to Mind Over Money listeners here is you sounding, speaking simply, plainly, and articulately, and not always talking 100 miles an hour. So I appreciate that.
Yeah, no, I promise that I'm not some freak. I use video editing software, and I have to speed it up sometimes because the maximum length that a video for an Instagram reel can be, which is kind of Instagram's TikTok style short video, is 90 seconds.
Okay.
And already, there's probably 3 or 4 minutes of footage that's usable that I had to cut out of those videos. And I know, even with speeding it up, even with splicing out things, it's got to be shorter. So that's one of the things that I'm working on right now, just being as concise as possible with these videos, so that I don't have to speed it up.
Well, Zechariah, I want to wrap this up. Your website is ascentpersonalfinance.com, correct?
Yep.
And where do we find you on Instagram or TikTok?
Yeah, my Instagram is zechariahs.adventures. And then on TikTok, it's Zechariah Talks Money. I just started being active on TikTok again. And then, as you mentioned, my LinkedIn is just my name, Zechariah Schaefer. Yeah. And that's where to find me. So thank you all for taking the time to listen to me today.
And that's Zechariah, Zechariah. I wanted to say one more thing. Well, the other thing I loved about this conversation, listen, I am at least twice your age. We won't get into details. And I wish I knew a tenth of what you know when I was your age, in my early 20s. So I'm just thrilled to meet you. And I've learned stuff from you today that like the idea that the crypto investors, the millennials and Gen Z, they're getting behavioral economics training right now by having experienced more bear markets in crypto than anybody who's not in crypto, who's just in stocks and seeing their first bear market in stocks. So that's such a cool thing that you have to really teach them the mechanics of keeping their mind over their money.
I'm just so thankful for all of the mentors that I've been blessed to have, like Professor Cornfield, who I mentioned, like the advisors that I work for those firms, and other people who've been placed in my path that I've been blessed to learn from. So I'm just really thankful for them.
Yeah, and you're passing it on. All right, Zechariah Schaefer, thanks so much for joining us on Mind Over Money.
Thank you.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.